These are exciting time for the Indian aviation sector. New and big airports are coming up. Airlines already placed a huge aircraft order, but then there are a couple of challenges as well. So amid all this, how is the India's newest airline, Akasa Air, is performing? So to talk at length, joining with me is Vinay Dube, who is the founder and CEO Akasa Air. Sir, many thanks for speaking to us. Sir, we'll start with the winter schedule that kicks in from 26th of October. Would like to know how many flights Akasa Air is operating and how exciting is this winter schedule for the airline?
Yeah, so Samir, I don't have an exact number of flights that we will operate, also because our winter schedule is still evolving. And the reason I say, I'll provide some color in that we don't publish the full winter schedule all at one time, given we've got deliveries coming in at different points of time. So I would say what you see in the schedule is only a part of what we will eventually fly. As we get aircraft, you will start seeing a larger and larger winter schedule. So that's the first point. I just want to say that nobody should look at this winter schedule and conclude that this is the limit of the flying that we will do. Let me give you an example that nobody knows, but you will be the first to hear that that we have been very excited that we have got traffic rights to finally fly to Sharjah. This is our very first, for Akasa, the very first time that that we have got traffic rights to Sharjah. It's an extremely exciting destination for us, and you will see us load this flight to Sharjah, and I can't tell you from where, but you will see us load this flight to Sharjah at some point here in this winter schedule. So that gives you an example of some of the excitement is yet to play out. Of course, you've seen some in terms of the Mumbai Phuket and the Bengaluru Phuket already in the winter schedule. So I would say you should see a very substantial year-over-year growth. You should see some really exciting destinations, international destinations that play out in the winter schedule, and we couldn't be happier.
Great to hear that you are flying and you are aggressively expanding at international sector. So when we talk about the international sector, we have seen that Akasa Air is continuously going to add new sector, new destination. Sharjah is going to be the latest one. In terms of ending this financial year or maybe 3 years roadmap that you want to put in for yourself, to how many destination, international destination, you want to have it on your airline map?
So Samir, when it comes to a slightly longer term plan, we don't think of international in terms of destinations, but we think of it in terms of percentage of ASKs, percentage of seat kilometers is the way we look at it. And today we are, let's say, in the low 20s. So in the low 20% of our schedule, our entire capacity by available seat kilometers is international. Next year, next fiscal year, this will move up to 30 and eventually to 40%. And so, we can tell you in terms of available seat kilometers. It's a little harder to forecast in terms of exact destinations.
So the entire expansion plan depends on the availability of the aircraft. Give us an idea as of now in terms of the aircraft fleet size. What is the number that you are currently having in, and going forward the induction plan that Akasa Air has?
So, Samir, we don't provide a detailed breakdown, but I'll tell you two things. One is that we've still got 196 aircraft on order, right? So we're a 30 aircraft airline. And so we've got a path to 225 aircraft, right? Which is why, I keep saying that Akasa will be one of the, top 30 airlines in the world here by the very early 2030s, by the turn of the decade. The second exciting part when it comes to aircraft deliveries and expansion is that Boeing has just received certification or approval to go from a production rate of 38 aircraft to a production rate of 42 aircraft, which is wonderful for us because it gives much more predictability into the delivery schedule for us, and therefore much more predictability into our growth. So very, very excited about that. And you should see, high uh, double-digit growth between last year and this year. 30+%. Next year, very similar, or thereabouts. So growth is something that will be a big part of the Akasa future for many years to come.
Somewhat you are indicating that the supply chain won't be an issue, and in terms of the availability, in terms of the continuous supply of the aircraft, you are quite confident about it?
I am, yes. And this very recent news of Boeing is the proof point for that.
From bullion to barrels, steel to sugar, every commodity tells a story.
They move economies. Behind every price swing is a signal that matters to you. Gold, agri, oil, metals, every tick has a trigger. From big macro shifts to micro market moves, we decode the chaos so you don't have to.
Join me, Ashesha Advaryu, as I make sense of global commodities on Commodity Central, Monday to Friday, 1 p.m. only on ET Now.
Sunil, let me start off with the conversation with you. I just wanted to understand, how do you think this move is actually going to impact the MF industry to begin with?
So I think that, overall it's going to help the industry in terms of expansion, because I think clear cut, there's going to be a 15 basis points reduction in the cost of mutual funds, right, to the customer. So I think to that extent, the compounding effect of that 15 basis points as a cap, which has come down, should help overall the industry's returns, as well as customers to do that. But within the industry, the various players, right, the impact will obviously vary. So what's happened is that now I just heard the discussion that you had with your team member there, but I have a slightly different view, right? So first is that broking houses are getting impacted. You're saying from 12 basis points down to 2. But the reality is that most AMCs are not paying 12. They have negotiated this. The average is about 5 to 7 basis points. Now, the second is that it's not those brokers are going to lose that bit, because all it says is that the customer can be charged only 2. So if an AMC, let's say, is paying 6, the 6 minus 2 will come out of the expense ratio, which is already there. And there the choice is whether the AMC picks it up or they reduce distributor commission. Now, AMC to AMC, it will vary depending on the distributor negotiation, will vary. But the point of the matter is, 2 broking houses, the knee-jerk reaction in the market today, I feel is a good time to buy, because brokerage houses are providing that research for which they are getting that fee. Is going paid as a part of the transaction charges. But I think the top quality broker who's giving good quality service, this is not going to make them reduce that fee significantly. So today has been a knee-jerk reaction to the reaction as far as broking is concerned. The second aspect there is that, of course, AMCs, in terms of the reduction of the 15 basis points, on AMCs itself, I don't think that impact is going to be that strong, because they will pass this on to the distributors. So, as a reduction in the brokerage cost. So, to that extent, AMCs, I feel if there's a negative reaction today to the AMC thing, I think even that's a good opportunity to buy. Now, you come to the third angle of it is for distributors. Yes, there will be a reduction in their trail commissions by the bigger AMCs, especially because the bigger schemes are the ones which suffering the biggest 15 basis point cut. So they will naturally see a reduction. But what's also happened is that SEBI has also helped them another way because they have now allowed the GST on the trail commission, which was paid from the scheme, to be paid outside. So, which means that I think that this is my interpretation. So, in which case, the mutual fund distributors can set off this as the input tax credit against the expenses they have. So, while they may lose on the trail commission, on a post GST basis, their income will also get protected. So, overall, I think that it reduces costs for the customer. I think AMCs and the people manage this situation, and the GST thing will come and help even the distributor. So, I think that today the reaction is a bit of a nervousness to this, but overall, I think it's a decision which will help expand the industry and is in the interest of customers.
Right, fair point. But Jimmy, let me get you in on this conversation. Firstly, on the curtailing of brokerage payment, how do you think that piece will pan out?
As my colleague just mentioned, Sunil, it's most of the players were paying 5 to 6 pips, which also the data point shared by the regulator states that. In addition to that, what is also stated in the regulation is that while you may charge 2 bips or 1 bip, the balance can be part of TER. It can still be part of AMC. So if a smaller AMC were to pay a 5 bip or 6 bips, because for a smaller AMC, getting a 2 bips and a 1 bip is highly difficult because of the sheer volume. No broker is going to charge a 2 bip and a 1 bip to a smaller AMC. So there, the smaller AMCs on the contrary will take a hit rather than the broker. And unfortunately, the regulator says that the difference between the brokerage paid minus 2 bips or 1 bip can be part of TER. In addition to that, there is also provision that any expense over and above the TER after plowing back of the management fees can also be borne by the AMC or the sponsor. So all those tools are available. Plus, the most important thing that we are all missing out is expenses that were part of TER were earlier all inclusive of GST, be it the RNT fees or the custody fees or your banking charges, etc. Now, GST component or any statutory levies or even a stamp duty have been carved out outside the ambit of TER. So all expenses which earlier were inclusive of GST will be accounted for at their nominal value, and GST thereon will be over and above TER. So if you accumulate the GST component of all the expenses, including the management fees, the cut of 15 bips will more or less take care of. So there won't be a bip in the earnings of the AMC. The distributor, currently the commission is inclusive of GST. Now that will also be excluding GST. So again, an accounting set off can be made available by the distributor fraternity. One has to wait and watch how the different service providers provide data points in terms of cost plus GST thereon to enable the AMCs to book their expenses properly within the permitted avenue of 2.1 or 1.9 as permitted by SEBI.
Let me also welcome on board Akhil Chaturvedi, the CBO and ED at Motilal Oswal AMC, joining in on the show right now. Also, Akhil, hi, afternoon. Want to get you in on the conversation. What do you think will be the net result if indeed this consultation paper actually goes through? You think AMCs will then sort of negotiate lower brokerages from their brokers if this rule does go through?
So Aisha, I think Jimmy is given a very detailed understanding of how the expense issue is going to work. But broadly, if you see that we feel that there should be a negligible impact between the commission arrangements between AMCs and distributors, because as Jimmy explained that while there is a 15 basis cut on the base TERs, the GST and the other costs have become exclusive, right? So it should be revenue neutral beneficial to both the parties. I think one particular cost item, which is the 5 basis point, which is being charged in addition in lieu of the exit load, which goes away completely, right? So to that extent, maybe there could be some normalization, one-time effect between AMCs and distributors. But for the regular business, I don't see too much of impact or negotiation either ways.
Okay. Sunil, if I were to come back to you, give us a sense. So, yes, definitely this is a decadal theme, right? But what's in your opinion, what's the likely impact and who is going to be the most impacted by these regulations, the adverse impact? Give us a sense on what you believe is going to be the adverse impact and what should one keep in mind in terms of the quantum of the adverse impact.
So I think if you ask me the adverse impact, I'll take it as two parts. One is from a stock market participants and a non-stock market participants, right? So the overall regulations today impact broking houses, AMCs, and listed distribution partners, right? So these three other listed players. And I think between them, there will be not much impact because to answer the question there, for brokers, like I said, the average is already being charged 5 to 6. 2 will now come from outside of the scheme and the balance 3 to 4 will come from inside the scheme, right? To the extent that there's a little bit of a hit to the AMC, I think there's also the fact that there's a 15 basis points cut in TER. So at the lower end of the distribution pack, which are not the listed AMCs, but the smaller MFDs, they probably take a little bit of more of the brunt. But the listed bigger distribution houses will be able to negotiate a reasonably better commission structure. So I don't see them also getting affected. And as far as the AMCs is concerned, because there is this huge pool of large set of mutual fund distributors who are at the base end of the bottom of the pyramid, right? Passing on a little bit to them, they will be able to manage. So to me, really speaking, there's a big negative reaction to any listed player in the stock market because of this. There will be some impact on the smaller marginal players whose negotiating powers are naturally not as strong as the bigger players. So I think that's the way I would summarize this.
And Jimmy, if I can come to you, give us a sense on would you be able to, in some form, give us a sense on what the impact for an AMC will typically be? I know it's hard to determine and it will also depend on what the brokerage currently is like, but some of the larger brokers obviously might benefit a little bit more.
On the AMC front, as I mentioned, because of the GST component, it has to be expense neutral in that sense at an overall expense booking perspective. If we were to look at exclusively only from a brokerage perspective, yes, there might be some hit because as I mentioned, the smaller players may not be in a position to negotiate that well with the broking houses, and the broking commission or the brokerage may not necessarily come down to 2 bips or 1 bip because of the sheer volume that the smaller AMCs offer. So there probably the broking houses will have an upper hand in terms of leveraging their strength for the efficiency in dealing vis-a-vis a smaller AMC. As far as the rest of the cost structure goes, nothing changes. 15 bips gets compensated or gets neutralized by virtue of the GST component. Excellent,
super clear. Akhil, give us a sense as to what this means from a customer standpoint. Does this make life better for the customer, you believe, in the longer run, or does this bring or does it leave it open for further reform in this space? Is that something that one should fear? So from a customer and from a business standpoint, give us a sense.
Yeah, so, I mean, if you see over the last decade or so, I think every time the industry is achieving a significant milestone, there are economies of scale, and clearly the direction given by the regulators is every time there is economies of scale, the benefit has to be passed on to the end investor. And over a period of time, we've seen that there have been significant reforms as far as TERs, entry loads, exit loads, all of these things go. We are still in the growth phase as an industry. industry, and I think there are miles to go, and the industry can become a lot more bigger in size over the next 5, 10, 15 years. And therefore, I think the reforms probably would continue. I mean, the last reform happened in 2018, I believe. At that time, the industry was about 25 lakh crores. Today, we are 75 lakh crores, right? So I think the reforms will continue, and clearly investors will keep benefiting from the incremental reforms. This time around, I think the reduction of the trade cost, or the brokerages paid to brokers for trades, coming down by 10 basis points is like it's a meaningful cut in terms of operating expense, and that benefit will eventually be realized by the investors. So yeah, they stand to gain definitely.
Okay, Akhil, Jimmy, Sunil, thank you so much for joining us, gentlemen, for this discussion. It's been an engaging one. Thanks so much for coming in and speaking with us.